I'm mainly interested in my questioning on the regulation of cryptocurrencies in the Chicago Board of Trade, and I also have concerns of regulating them in the SEC, which I may get to later, realizing that that's not really your um, responsibility. When a commodity is listed on the Chicago Board of Trade, um, what are the primary requirements for it to be eligible for listing?
Well, above all else, it needs to be a commodity. The definition of commodity is quite broad, and it's essentially, in some respects, a non-security. There are enumerated commodities, many which this committee knows that are physical commodities, but other types of commodities that could be services, rights, or interests. This is just a regurgitation of the statute. But ultimately, there's been a process that's been built over decades where the exchange, and in the case you're using the Chicago Board of Trade, looks at the statute, our statute, and the regs, the implementing regulations of the law, and essentially complies with the requirements around listing a contract and providing specifications. And then
is there a document that underlies these qualifications? Like when Bitcoin or Ethereum were listed on the Chicago Board of Trade as derivatives, were there documents that suggested what the criterion were and how they met those criteria?
In some respects, the Bitcoin or Ether listings on the futures exchange were no different than the steps that needed to be taken or have been taken to list an agricultural or energy futures contract. It really just starts with that definitional question: is whether or not the product, the underlying product, is a commodity. If you can answer that question in the affirmative, everything else kind of falls into place.
Does it? Do you take interest in? Is it a broadly held commodity? Is there transparent diversity of producers? Are there transparent diversity of buyers and sellers?
Yeah. So from an exchange perspective, an exchange is never going to list a contract that it knows will not succeed. So they want to make sure they have a sufficient amount of buyers and sellers, and that the contract will succeed in that respect.
Have there been commodities that failed to be qualified for listing on the exchange?
I don't think we would have ever gotten to a point where it would have been listed if there was a question about the definitional structure of the underlying product. We would largely answer that question in the affirmative with confidence before the exchange self-certifies or seeks approval from the agency to list a contract.
So with Bitcoin, Ethereum, these cryptocurrencies, what is it that's being sold? What is it that it meets the essence of a commodity, a physical commodity, or a like an interest rate swap derivative that has a real world business purpose? What is it at the end of the day that qualifies these things to be sold as something other than Beanie Babies, Pop Tops, baseball cards?
So in the cash market, in the underlying market, which is what I take your question to be, really the interpretation of what it is less a physical commodity, which are enumerated in the statute, whether it's corn, soybeans, or a metal, gold, silver, or an energy product like natural gas or fuel. It's mostly used in the counter or the negative. It's not a security. And if it's not a security, then it's a commodity, in which case the analysis has to take place to make a determination that it's not a security, which is frequently how we test whether it's an investment contract. If you can't answer that question in the affirmative that it's not a security, then it becomes a commodity.
So anything that seeks to get on the Chicago Board of Trade that can't be categorized as a security, meaning maybe it's a common stock that has dividends, earnings per share, forward-looking statements, a board, a management team,
Yep.
book value, anything that doesn't meet the qualifications of a security can be listed on the Chicago Board of Trade simply because it's not a security?
So differentiating a Beanie Baby from the company that produces Beanie Babies and has a board of directors and an executive team and et cetera, like that is that share of the company that it issues to investor to raise capital is a security, but the actual product itself, in this case the Beanie Baby, is likely a commodity.
So our current legislation to regulate cryptocurrencies begins with the cryptocurrencies being traded as commodities, but then elevates the currencies themselves, not the company, which you just elaborated very clearly, to be traded as a security. How is a cryptocurrency, in your mind, realizing that you're a commodities guy, ever going to meet the standards of a security?
So you can imagine that there are cryptocurrencies, and this happened, certainly 4 or 5 years ago, we'll see if it starts again. Highly unlikely, where a group of individuals tries to raise money, and in exchange for raising fiat capital, whether it's dollars or some non-U.S. currency, issues a token, a cryptocurrency, as opposed to a traditional share of stock, which we're accustomed to in traditional equity markets. It's in that situation where that group of individuals would raise money and use that money to develop some sort of software or protocol that you could interpret that
But
token
it's
to
got
be security.
it's got no share issuance. It's got no board of directors. It's got no management team. It's got no earnings per share. It's got no book value. It is simply a broadly traded issuance of crypto. It really doesn't match any of the tools available to the SEC to regulate forward-looking statements, insider trading. There's a lot of gaps, in my opinion, both on the commodities exchange as well as the SEC, to treat cryptocurrencies as either commodities or securities. And I think we're shoehorning here to try and fit them into regulatory schemes and give them credibility that they don't deserve.
Congressman, I don't disagree with you on the former part that we're shoehorning to an extent. I think there are some points which are more clear than others, but given the nature of the technology and what I've observed over 7 years at the CFTC, it demands legislative change. I would disagree with you in part on the second part of your comment. Legitimacy is neither here nor there from my perspective as a regulator. What I've observed is a market evolve, develop, and see extreme amounts of adoption by retail investors. And I have a responsibility to protect those investors, and I need the tools to do that.
Protecting the investors is accomplished by giving credibility in a regulatory scheme that is failed in many ways to provide investor protection.
Well, I mean, we could look at the history of Bitcoin right now and where we are today. And the fact of the matter is there are investors who continue to want exposure, both institutional and retail, to Bitcoin. So for me to step back and say, I don't want to legitimize it, that's an option, but ultimately people are going to get hurt. They're going to lose money. And I feel like I need to use the tools.
Well, there's nothing there that's going to cause people to lose money.
That's a subjective.
Thank you, Chairman.
No easy discussions happening in this room. So with that, I'll just jump right into it and dispense with comments. Chairman Benham, decentralized finance. And I know I've heard some of my colleagues here today talk about this. And again, I don't want to get into the weeds too much, but DeFi, it's a growing component of the digital asset ecosystem. And it's been receiving a lot of attention. So can you please share with us any ongoing or planned rulemaking work streams at the agency regarding this issue?
Congressman, thanks for the question. We are certainly engaged with the market, the stakeholders. I mentioned earlier we have an Office of Technology Innovation. We have several advisory committees, and some of them look into this space and convene members of the technology community. And we're looking at how we can engage, we can learn, and to ensure that our rules essentially reflect where the technology is. I would say, though, that DeFi presents a lot of issues. We brought a number of enforcement cases where there have been individuals offering derivatives products, but they don't necessarily have a centralized traditional model of a broker, an exchange,
right,
or a company. It's an automated sort of trading platform is the best way to think about it. Is you have a group of individuals who programs an automated trading platform, and it just sort of self-executes on its own without any human intervention after the start, so to speak. That doesn't change the fact that this protocol or this program is offering derivatives contracts to customers. Often, or at least on occasion that we brought an enforcement action, people are losing money, or there's fraud or manipulation, or they're not registering with the CFTC as required by the law. And despite the fact that there's no centralized group, or there's an individual who's the CEO or a board of directors or a headquarters, the fact of the matter is, as courts have determined in litigation that we've faced, DeFi can have the same or similar characteristics as a traditional company or entity, such that we could bring a case. So, tricky questions. I think it requires a lot of legislative thought, but we're doing our best to work through these issues, engage. But ultimately, I would hesitate to say that we should stand back and not protect customers because the law is not crystal clear, a decades-old law, about what decentralized finance is.
And I appreciate that, but I also am very wary of overregulation and government having a heavy hand, which tends to stamp out innovation and opportunity. So I would love to see more engagement and forward-facing engagement from some of the industry partners. But I want to shift a little bit talking about blockchain and how that is really a huge part of this conversation. With the evolving landscape on digital assets and DeFi, what regulatory challenges specifically do you foresee in overseeing blockchain based financial products and services? And specifically, what steps is the Commission taking? And I know we talked about this just a little bit, but I want you to talk on the blockchain element specifically to ensure investor protection.
So blockchain's been really interesting to observe because I've had a number of demonstrations by large financial institutions or trade associations in town, which have demonstrated how blockchain is being used by some of these traditional large financial institutions on settlement, on payments, on custody, and really just creating, in their view, a more efficient payment system from a customer perspective or from a financial wholesale perspective. In some respects, our core principles, which we have a principles-based regulatory structure, is very helpful because you can almost fit a lot of different technologies into a principles-based regulatory structure. It's about compliance and being free from fraud and manipulation, having a proper governance structure, making sure you have system safeguards, all things that would apply if you were on a trading floor or if you had a blockchain. So we're engaging with the industry. We're trying to learn what they're doing. I don't think adoption has been so deep at this point that we necessarily have to jump ahead and write rules. I think in part our principles-based regulation is adequate, but there could be components of blockchain that would require policy, either a rule, advisory, or guidance. And we certainly want to see and observe what's going on in the industry so whatever we do, to your point, doesn't get ahead.
Well, and I will say, especially given the fact that we don't want enforcement to become the mechanism by which this gets rolled out. We want legislative solutions so that it's actually done correctly. But given that the derivatives market is so largely overseas, and I know I'm over my time, but I'll just leave us with this. Given the international nature of commodity markets and global proliferation of blockchain technologies, is there any cross-border cooperation or efforts underway on this?
Yeah, we work closely. So I'm the vice chairman of IOSCO, which is a multilateral organization across all securities regulators in the globe. We participate with the Financial Stability Board. I have frequent conversations with fellow regulators in Europe, Asia, the Middle East. So we are observing what others are doing and trying, to your point, to draw comparable rules and regulations so there's a little bit of a seamless entry and exit across borders. Because as you point out, we're in a global financial system, and to have different regulations and rules creates barriers, arbitrage opportunities, which are risk, but ultimately prohibits these businesses from doing a lot of the work that they hope to do.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And this one is for the YouTube stock channel. And we have the CFTC Chair Bayman speaking about cryptocurrencies, DeFi, and blockchain. And we know cryptocurrencies are going to allow them to program the money. We know DeFi is definitely the new banking. And then we know blockchain gives the NWO the all-seeing eye. Now, this hearing was done about 11 days ago and only has about 158 views. And this is how the NWO moves the agenda forward. They are clearly moving all of this technology forward right in front of the sheep's eyes. And we're definitely going to have regulation starting this year and a lot more next year. And never forget what the bank man was working on. I brought you plenty of videos. You have this $100 trillion derivative market sitting on blockchain being ran by an algorithm and not a single human involved. That means a farmer can wake up and own nothing, but they want them to be happy. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
I have a general sense of what the report is and its findings, yes.
Thank you, Chair. And I appreciate you putting that report together. And that report subcommittee found, and I'm quoting from it, that nothing is, quote, completely decentralized or centralized in DeFi, that, quote, this creates a real challenge in defining business and technology models that would make systems sufficiently decentralized. The report found and names 5 different dimensions of decentralization to be considered, 6 different technological dimensions of decentralization. They created a matrix to try to figure out how to really determine that something is truly decentralized. It's a pretty complex set of findings, but the summary at the end of the day here was that there is no single dimension or technology that will serve to make a project or an enterprise decentralized, and that there's a great deal still to learn about these technologies and how to determine if something's decentralized or not. Does that generally check out with you?
Yeah, 100%.
So my concern is that around the FIT Act, which has, of course, come out of this committee, is making its way through Congress, it doesn't directly tackle DeFi, but it is specific. The whole bill hinges on the question of decentralized governance and decentralized networks. And my concern, and I'm interested in which concerns you share with me, which ones you may not, is that we may be premature with passing this bill if this agency report, which I appreciate you all putting together, has these real concerns that we may not yet be ready to define what is truly decentralized and not. And so do you have concerns about the amount of work that it will take your agency to implement the FIT Act, given those challenges defining decentralization? Do you have concerns that this hasn't been these questions haven't been developed enough yet, and there's still so much to learn that we might just be handing you a bill? And I don't want to be setting you up to fail, and even more importantly, I don't want to be setting up the American people to potentially suffer financially if we don't regulate this right.
Yeah, Congressman, thanks. It's an important question. I would say one on the report you're mentioning. It's an advisory committee largely made up, and you said this, of practitioners, some academics, public interest. And it's just going to get a little sort of wonky on the technical side. It was a subcommittee, so it's not technically before the commission yet as a set of recommendations. The whole committee would have to, the whole technology committee would have to approve it in order for it to officially come to the commission. And there were a number, or at least one, dissenting opinion. So I think there's some things to think about what were the pros and cons of the report. Regarding the FIT bill and your point about its prematurity, and I appreciate that, DeFi conversation is quite complex. We've brought a number of enforcement cases, which I think have raised policy concerns from folks outside of the CFTC, and even some inside. We had some dissenting opinions, which is fine. But structurally, I do think, regardless of the level of decentralization, there are very clear rules, and that they've been developed and mature over a number of years within the Commodity Exchange Act about what conduct is permissible, not permissible, and if you do offer a derivatives contract to a customer, you have to register or have to comply with the rules. So it's definitely not what we've historically been used to, but I think the principles still apply, and that's what we're trying to do at the agency.
And when you mentioned historically, you mentioned just recently, and I want to get the number right, that about, was it half of your budget or half your enforcement budget is going to these cases now?
So half of our enforcement docket, so out of 96 cases in FY 2023, 47 cases, or 49% of our enforcement docket, was crypto related or digital asset related.
And I guess just because I'm short on time, just my concern is if it's already half of your docket, and then we are to hand you this whole industry to regulate, potentially with fewer resources than you've asked for, in an area where this subcommittee's report is saying we're having a lot of trouble even defining what is decentralized. I worry that that's going to lead to lots of problems. You've got an industry that in just the last 3 years has lost $2 trillion on its market cap. That's 60% that it's lost. It's really volatile, and so I worry about that when we really need to be protecting farmers and ranchers and dealing with oil and wheat and this other industry where some of these experts are saying we still can't even really define what decentralized is, I worry about setting the CFTC up or the American people up for a failure here.
Congressman, I appreciate that point, and I think we should always walk cautiously, whether it's legislatively or administratively. But my observations over the past 7 years and the enforcement cases we've brought, I appreciate your point of view on the size of the enforcement docket being one where we're not focusing. As I said to Mr. Langworthy, our number one priority is always traditional commodity markets. But to me, and yes, the market cap dropped from $3 trillion in 2021 down to less than $1 trillion, a year ago, and now it's back up over $2.5 trillion. To me, that just demonstrates there is real, persistent adoption and demand from Americans to invest in this asset. It is unregulated. That's been proven across, I think, the U.S. regulatory scheme. And I think every minute that goes by is a new investor, a new retail participant who's potentially going to lose money. And I think we need to act quickly. If we need to subsequently act on DeFi or other areas, that's fine. But we need to act. It is consuming a huge amount of our resources because there's so much fraud out there in the public space.
Allowed CFTC registered commodity derivatives exchanges to list Ether derivatives contracts. And in October 2023, SEC approved an Ether exchange traded fund that characterized Ether as a commodity and was based on those futures contracts, thereby tactically accepting that Ether is a commodity. Can you please share with us your views on Prometheum's plans to custody Ether, an asset that you and at least at one point the SEC considered to be a commodity?
Chairman, I think the point you raise is really the critical one. We do have listed Ether futures contracts, and we have had them for a number of years, just about 4 years. And by default, this is at least in part why I publicly stated that both Bitcoin and Ether are commodities. I have not been in communication with Prometheum. I have not discussed their decision making, but from my understanding, essentially reading the press and talking to my staff who have reached out to the SEC, this was an independent decision by Prometheum, which is, as you mentioned, a special purpose broker dealer to signal to the market that there is their intent to custody Ether. So it is my understanding that this was not at all a decision by the SEC, and that this was an individual decision by the entity. How this plays out obviously is very critical and really goes to your point. And the issue is, if we do have any action by the SEC to essentially validate that decision, i.e., constituting Ether as a security, it would then put our registrants, our exchanges who list Ether as a futures contract, sort of in non-compliance of SEC rules as opposed to CFTC rules. So I am working with Chair Gensler. We're working with his office. We're working with the agency to ensure that whatever steps are taken are deliberate, that we're involved, and that they understand certainly what the consequences would be if there was a decision by the agency to determine that Ether was a security. As of now, we need to preserve the integrity of our markets and understand that this is a years-old decision where these markets are functioning well under the decision and the conclusion that Ether is a commodity. And about what we're seeing in our markets, the changes that have occurred, I mentioned this to the chairman, the concentration of participants and players, the lack of access and services for smaller participants, and the importance of the diversity of participants in this pool so that farmers and ranchers in Kansas can have access to futures markets. You hit the nail on the head when you said the futures markets are not going to eliminate all of your risk, but it can be a part of a larger toolbox, some of the commodity programs over at USDA, to mitigate risk and reduce it to a point where that farmer can go into planting season every March or April and feel confident they're going to come out during harvest on the right end of the season. Ultimately, we have to make sure that banking regulators understand what we're seeing in our markets, that there is an incentive to clear, and in order to clear, we need FCMs and brokers offering these services to all constituents. So we will continue working with them as the banking regulators finalize a rule, and we will keep harping on the importance of derivatives markets, clearing, and making sure that we're not laying on unnecessary, burdensome rules that will essentially create further concentration and ultimately increased risk in the markets.
Which will lead to higher food costs for all of us. So thank you.